Hey, Michael, how are you?
I'm good, Michelle. How you doing today?
I'm good, thank you. Happy New Year, happy holidays to you and to your family.
Thank you. You as well.
Thank you. Thanks for joining me here, Michael. Just want to let you introduce yourself. You're basically my go-to guy when it comes to loans for my clients. So why don't you tell us, let you introduce yourself.
Sure. I work with RPM Mortgage. We are a direct lender and broker. We work with over 80 different FDIC insured banking institutions. I've been in the business about 15 years, and I've only worked on this side of the business in terms of direct lending. So I've only understood how to work with many, many banks at one time. And I think it's given me a lot of versatility and understanding of this business, more so than having just worked at a bank and knowing one bank, one product.
Absolutely, absolutely. And I've experienced it myself using your or recommending your services for my clients. And I have to say, of course, there's always challenges, but you always come through. And if you cannot, you usually always tell me up front so we don't waste time and the client doesn't waste their time. So definitely highly recommend your
Perfect.
services. And again, I am Michel Bron with the Bron Realty Group, 21 years in the business and representing buyers and sellers right here in Los Angeles. So I wanted to have a little talk with you and talk about the past year in terms of loans and interest rates and things like that. And maybe we'll
Mhm.
talk also about what you see coming for 2022. So why don't you give us a little recap of 2021, if you don't mind?
Sure. So we saw a really robust purchase market. We saw a lot of buyers entering the market this year, more so than 2020, in my opinion, simply because the pandemic started to move a bit forward. We had more buyers entering the market who had been sidelined in 2020 because they either lost their job or had their pay cut during that time. And now they got their pay back or they had a new job. So it created more of a frenzy, in my opinion. And we saw home values going up a ton. We
Yeah.
also had people entering the market that were impacted by COVID and still trying to buy, and they needed creative financing. So we saw an uprise in the number of non-QM loans that were being done in 2020. Certainly in my pipeline, I saw that.
Clarify non-QM for our
Yeah,
viewers.
non-QM stands for non-qualified mortgage. And as much as that sounds like a bad mortgage, it's not. It just means it's not securitized the same way. And it just means the bank is a little more diligent in how they honor those types of mortgages. More reserves, more scrutiny. They're great loans, good interest rates, just a different way and a different mindset of doing a mortgage. So it's not the same as the mortgage meltdown that happened in 2007 with
Right.
subprime.
Right. Okay.
Now we
And
also
yeah, I'm sorry. Go ahead.
I was going to also say, we also saw the interest rates start to go up a little bit this year, particularly towards the latter part of the year. So we saw a little bit of a decline in terms of the refinances on the rate and term refinances, a little more on the cash out, but still robust on the refinance end because all those people that couldn't do it in 2020 because they had been impacted, they were now doing it in 2021. So
Right.
that was the main difference. So the rates were still low, not as low as they were in 2020.
Yeah. Yeah. Great. And it's funny because when we talk about interest rates, I mean we're going from like 2.75, 2.85 to maybe 3% or three and a quarter. And if you really look at it, the grand scheme of things, I mean it's still super low. I mean, who can you meet in the street and say, hey, can you lend me a $500,000 for 3%? I mean, it's still dirt
Right.
cheap, right?
Yeah, you're splitting hairs in terms of they're still low. They are still at
Exactly.
historic lows.
Exactly. So great. All right. So now let's talk about what you see, coming forward towards 2022 in terms of interest rates and on what time frame do you see this happening? And of course, we know they're just prediction. It's very difficult to really know exactly what's going to happen. And I know you're kind of you follow what the
Yeah.
what the Fed is guiding with. So yeah, I'd love to hear what you think of the future.
Yeah, sure. So, I mean, in general, we think the rates will go up at this point. We've got through the pandemic, that everyone has kind of settled in to understand the impacts of the pandemic at this point. So at this point, the Fed has made it very clear by starting with the tapering of mortgage-backed securities that they are going to increase rates. We probably think the first rate hike will come around March of 2022 if everything holds to be stable, simply because they're trying to combat inflationary concerns with everything going on. They do not want to have any kind of collapse of the market, not the same kind of collapse, but they want to make sure that they're getting ahead of this a little differently than they did in 2007. And on top of that, we're going to be seeing more of a chance of the rates going up probably 2 to 3 times over the course of the year. So, it's just one of those things where I think that we'll probably still be in the threes by the end of the year. If everything holds, assume maybe 3.75 to 3.875. They really don't want to crack the 4% marker. They still want to keep it low. And with all the variants and stuff, you never know what can happen. I mean, you can see what's happening right now. There's different industries that are being impacted tremendously with this Omicron variant. So all it takes is for something to happen here that kind of derails, and they have to kind of stall their plan.
Right. And so that's really informative. That's really interesting. And of course, in terms of how they impacts the real estate market and how that impacts prices, I think that basically, if people want to make a move, whether it's a buyer or a seller, they probably want to do it sooner than later. We've all heard that prices are kind of softening a little bit. The prices are probably still going to continue going up in 2022, but probably not at the same rate. And so, of course, for buyers, if interest rates go up, it means that money is going to be more expensive, and a $1 million house is going to cost them a little more per month than 6 or 12 months ago. And same thing for buyers. If they want to get more for their homes, they want to make sure that the buyers can afford larger monthly payments, and therefore they'll sell their house for a higher amount. So
yeah, that brings up a great point though, Michelle, just because you're talking about rising home prices, and that's what Fannie and Freddie saw that was happening tremendously throughout the last year. And that's why the loan limits for 2022 went up a significant amount.
Right.
That's why you can put 5% down now on a loan at $970,000, and you're buying essentially $1 million home with minimal down payment, because there weren't ways to combat that unless you worked with a specialized lender or a direct lender where we had more products available to stretch you into these price ranges, because it wasn't reasonable in certain markets for the first time buyer to be able to buy something.
Right. So that's actually my segue into my next question, which was, what do you see maybe coming into 2022 as different kind of options for buyers to maybe buy a home? I mean, we all think of the traditional 30-year mortgage, and obviously there are other options. And I'd love to hear what you have to say about that, and maybe different strategies that people can use to buy a home.
Yeah, I don't think I can reiterate this one concept enough, because I'm doing it a lot with my clients, but it's advanced approval. Get advance approved. That means get underwritten ahead of time by the bank and get the loan approval in hand so that you can make competitive offers, because there are going to be more and more buyers heading into the next year, and there's not a lot of inventory. We're still not anticipating a huge change in the inventory. So you've got to differentiate yourself from the pack, get underwritten. I would also say get less shopping. Right? Figure out who you're going to use, whether you like the service, the rates, kind of commit a little bit earlier, because when you're writing these competitive offers, you're not going to have time to mess around with 2, 3 lenders. If you're writing offers that are 15 days to close or 17 days to close, because you got to go. And so part of that strategy is going to be get aggressive, get with the right lender, and just trust the system, but advance approve. That's going to be key, I think, to changing and forcing out a lot of other loans, especially on the retail side, where they're not offering stuff like this currently, to my knowledge, at least. And it's going to make you more competitive side by side against cash and other loans.
100%. 100%. I mean, we've seen it happen with our buyer clients, where when you had some of our clients fully underwritten, it makes them a lot more competitive versus people who are still trying to get their duck in orders and trying to get their order.
There's not going to be time. I mean, there's so many examples I could go into for days on this stuff.
Well, is there any particular clients or anything in particular you want to tell us about that maybe where the strategy helped?
Yeah, I mean, honestly, I have one that came to mind that closed in November. I originally pre-approved the client for a combination loan, a first loan and a second loan, simply because they didn't have deep credit, they didn't have reserves, they were doing about 10% down, and they approached me, talked to me about a certain bank offering a certain product. I said, that's great, I have that product, but I'm not offering it to you because you don't credit qualify, you don't have enough reserves. And so they went and talked to that particular bank directly anyways, which is fine. It's not deterring, it's all the same facts, but they were misled, got into contract. I didn't know about it. They all of a sudden call me 20 days in. They've got a problem. They don't
Wow.
credit qualify and they're not getting an exception on their minimal
Just like
reserves.
you had predicted.
Yeah, I mean, it's not blowing smoke, it's telling the truth and
Yeah.
letting people make their own decisions. But at the end of the day, I had a responsibility to my agent as well as the buyers because I could see the stress on their faces when we would Zoom as well. And I needed to get it done. And so I went back to the original loan that I wanted to do. And we needed about a 2-week extension, but it was still closed in 25 days. We got them in right before Thanksgiving. Everyone went home happy. And this was a scenario where they didn't have an option to extend their lease because the rental market
Wow.
is so competitive right now too. They gave their notice. Someone already had signed a lease. There was no going back and getting an extension. They were about to get out and need to be in a hotel. So it's just a good example of like, don't play games, stick to the lenders that you trust and listen to the guidance of your real estate professional. They've been in this business a long time and have seen a lot of stuff, and everyone's looking out for the client in the best way possible. But sometimes stuff happens.
For sure. That's a great example. And then, it just really reinforces what I've been telling, the viewers who watch my videos for years now, really get pre-approved. Get pre-approved with a reliable mortgage broker. Michael Abram is great, but if it's not going to be Michael, anybody who, comes highly recommended. And
Right.
like you said, trust the system, trust that they have your best interest at heart. Real estate professionals have your best interest at heart, and go through the motions, get it done, and you will get yourself a great property, a great house, or a great condo. So.
Yeah. And at the end of the day, Michelle, sometimes you end up refinancing. Right?
Yeah.
Because that's just what happens.
Yeah.
There's plenty of opportunities and things like that I've seen where we have to do a loan one way to get them in, but 6 months later we're doing that refi because that was just the stepping stone to get there. So,
exactly.
Don't try to leapfrog the system. Sometimes you've got to go down that.
Yeah, just do what you have to do just to get the property. There's always options after that. Absolutely.
Exactly right.
Yeah. Well, listen, Michael, this has been really, really interesting and really informative. We're going to have your information on the video right here. So if people want to contact you, they can reach out to you directly. Again, happy holidays to you and to your family. If anybody has any questions about their specific real estate situation, feel free, as always, to give me a call, send me a text. Be happy to answer any questions you may have. Thanks again, and I'll talk to you later, Michael.
Take care, Michelle. Have a good one.
Bye-bye.
Bye.